All right, welcome. So what this video is for is to walk through the last part of Chapter 1 exercise assignment. So we're going to start with number 4. So these last 4 parts, right, of the exercise assignment are all connected. They're when we create financial statements. So the financial statements are done in order for a reason, right? So first is the income statement. Then we have the statement of owner's equity. Then we have the balance sheet. So those are all connected. Then at the very end, we need the income statement and the balance sheet really is going to help us create a cash flow statement. So we don't really get into depth too much in cash flow statements until at the very end of the term. We'll talk about cash flow statements. We'll do a whole chapter on that. But we'll do a little one here at the end of our financial statements. So first, let's talk about the numbers up at the top of the screen. So when you have these numbers with any of the assignments you're doing in this course, right, the accounts and numbers are put in order for a reason, right? So we're starting up here on the left side with cash, right? So that is our first account that we have, followed by accounts receivable, and then office supplies, right? So these first 3, and then land and office equipment. So the idea is all the way down to office equipment here, right? Up to cash, those are assets. So they follow the same format as our accounting equation, right? Assets equals liabilities plus equity. So assets are the first accounts that are in our what we call our chart of accounts, right? So they're the first ones, and they follow the accounting equation. The next one down here, which is accounts payable, that's the only one, but that's our liability, right? So assets, liabilities. Then we have our equity account. So it's our owner's investments, right? That's the same thing kind of as like a capital account. In a corporation, it would be our accounts like our stock accounts, right? Would be there showing the ownership in the company. Withdrawal account there, right? In a corporation, the withdrawal account would actually be dividends. So we'll talk more about corporate accounting and partnership accounting again later on in the second half of the term. Then we have as part of our equity, we have revenue, right? There's our revenue account, followed by expenses. So we have 4 expense accounts here. So when we do our financial statements, what we're going to do, another term that's kind of used for this, it's called rolling up the numbers. Rolling up the numbers. And that's because we start at the bottom or the very end of our chart of accounts, right here with all of our expenses, right? So we're going to start there. Our expenses and our revenues here. We're going to use those first, then we're going to continue on up the list as we create our financial statements. Okay, so we have our income statement here. We're going to go ahead and create our income statement. The income statement really is, it is a record of a time frame, right? And so it's going to be, right, for the month ended December 31st. So we're going to do it for the whole month, right? So the first of the month all the way through the end, December 31st. It's not going to be as of, right, as of December 31st. That's just that'll be used for our balance sheet because that's just a snapshot. Where is it at this date? Instead, with the income statement, we're taking, again, that chunk of time. So that whole month ending December 31st. So our first section here is going to be our revenues. Our next section down at the bottom here is going to be our expenses, because that's really our income statement, right? Revenues minus expenses equals net income will be at the bottom. So we'll create that here. So our revenues, again, we go up to our numbers. Here's our revenue. There's only one of them, right? It's going to be here at the end with our revenues and expenses, the end of our chart of accounts. So our consulting revenue, we're going to throw that in there, right? Consulting revenue, there it is right there. And then our expenses, we're going to have 1, 2, 3, 4 of them. So this is something you can do as you look at your chart of accounts to make sure you have all the accounts that you need in this financial statement, or in all the financial statements. you're using these, right? So if you need all of your expenses, you got to go account them and find them, right? So there's 4 expenses, and we can do those. So it's rent, salaries, telephone, miscellaneous, right? So here's our rent. Here's our salaries, is down at the bottom. Here's our, I think telephone was the next one in the list, and then we have miscellaneous. There we go. So they're lined out. So these, another thing is, as we create these, we can leave blank lines, right? So that's going to be one of them. So here's 13,320. Whoops. So that's our number there. Next one is going to be our rent expense right here. We're going to take that and put that down here, right? We can take our salaries expense. You can, if you have these numbers listed out, if you really want to, you can do Control-C to copy, Control-V to paste, or you can just key them in, right? Whatever's quickest for you. So like 830, whoops, as long as you key them in correctly, you're good to go. And then 640 here at the bottom. Okay, so that looks like that. So we got everything. It actually fills in our descriptors here for total revenues and total expenses. And then to really work it out here, we're going to have our pull out our calculator here, and we're going to go 13,320 minus 10,710, right? Revenues minus expenses. So 2610 is going to be our net income. So we're going to have to, there it is right there. Net income, if it's a negative number, it'll be a net loss, which is possible in a business, right? Not ideal, but we can, it is possible. Okay, so now we're going on to the next one. So let's go to the next one. This one is, again, we have the same numbers right there, right? So we're going to start with capital balance, and the idea is to say by the end of this month, right, for the month ending, right, so all the activity going on this month, what is our capital? What's our change in capital going to be, our change in owner's equity? We start with 0 because this is a new company. So for example, some of the things that happened was we earned net income, so we're going to throw that in there, right? We also had investment by owner. We can switch those. We can go up and down on those. It doesn't matter. And then is there anything we subtract? Yep, we've got a withdrawal by owner right in there. And so we're going to go ahead and throw this in. So where does our net income come in? Well, that's our last, on our last problem set, right? We calculated net income right at the bottom. So right here, our 2610. So we've got to take that number over. That's why these financial statements are done in order, is because we've got to find this number so we can create the next one, right? They're all linked together. So super important on that one. Investment by owner, owner investments, there we go, is 83,390. 83,390, there we go. And then our subtraction, or our less here, is withdrawals by owner, 1460. Okay, so there we go. And then really what this is going to be our balance at the end of the month, right? So we start with December 1st. We have all this stuff happening. Our equity balance at the end of the month is 84,540. Okay, so now we're cruising along, and we're going to use part of what we just did here in the balance sheet, because they're all connected again, right? So our balance sheet, this one's going to be different. This one's going to be just that date, as of this date. These are the balances, right? This is in the ledger. As we make changes, all of our transactions, debits and credits, all this stuff, we're going to talk about debits and credits next term, or not next term, but next chapter, sorry. But that's going to be, we're going to end up with a balance at the end of the month, right? From all of our activities. So we're going to have all of our assets. So these are in order by the accounting equation. And the assets are going to equal these two things, liabilities and equity, right? So it's going to be that. So our assets, again, this one we're rolling up. So we've rolled up really to this point, right? So we've included owner investments. So now we've got all the rest of this up above here. The cash and our assets and our liabilities. So we're going to throw that in there, right? Again, how many assets do we have? We have cash, we have accounts receivable, we have office supplies, we have land, and we have office equipment. So there's 5 that need to be included in here. So these assets, right? We're going to start here and we're just going to go down and list all of our assets. At the bottom, we're going to have total assets. Okay, so list all 5 of them there. Liabilities, we only have, in this one, we only have 1, right? Accounts payable, that's all we're going to have, right? And then we're going to put the number down there from accounts payable. Again, cash, and we'll add it up. Equity, so where does equity come in? So in equity, we have, in the equity section, really, if we look at the expanded equity, we have our owner's capital, we have withdrawals by owner, we have revenues and expenses, right? But really, this balance sheet, we've already done our revenues and expenses, right? We've already done the withdrawals, we've done and all the investments to create a new equity balance. All we're doing is capital. Capital is our permanent account in equity. So capital is the one that we're going to use on here. That's going to be our one equity account. And it's going to be right there, J. Ernst Capital. This number here is going to be the number that we created back here. So 84,540, right? 84,540 is going to be that number. And we're going to pull it forward to our balance sheet, and we're going to put it right here, 84,540. So the trick is, with this, is that the liabilities and equity, as we add them up, they will equal the total of the 5 assets. Because it has to balance, right? This is the balance sheet, it balances, and our accounting equation is really what this is, right? So it has to balance, it has that equal sign in there. So at the end, just something to help you out with, right? I'm not completing this, I'm not completing everything, I'll let you complete it all. I'm just giving you some tips to do it. So we're going to do total liabilities and equity, that'll be the total here. So our total assets, this number that once we get all the assets in here and put all the numbers in, all 5 of them, they will equal whatever the balance is here once we get our liability in there of the total liabilities and equity. So those will balance, okay? All right, now for the next one, next and final, because this one's a little tricky. This one's a little tricky, so let's take a look at our cash flow, statement of cash flows, okay? So statement of cash flows, the way this works is really we're tracking cash inflows and outflows, right? There's different ways to do it. This one right here is going to be, let's see, this is going to be the direct method, I believe. Yep, direct method in here. So anyway, so this one we're going to be doing, and it'll show all of our inflows and outflows from first our operating activities, right? That's the very first one up here, operating activities. Operating activities for a cash flow statement basically just means all cash in and out for the actual thing that we do that makes us money, right? The main purpose of the company. So if we are selling bicycles, then it's going to be everything related to us building bicycles and selling bicycles, right? Just that operation, okay? If we're an accountant, then all the operation is really doing accounting, right? So all the income or the cash that we collect for doing accounting services and everything all the cash spent supporting that operation of doing accounting, okay? The next section is investing. This one is going to be related to things like buildings, equipment, those things that we need to buy, computers, things that we buy with cash to help us have all of the long-term assets or fixed assets or things that we need they're called investing activities. They're bigger dollar items to invest in our company so we can have the infrastructure to do our business, right? The last one down here, financing activities, that's really related to cash flows in and out related to our equity, our ownership, right? Ownership, raising cash so we can pay for all these other things that we're doing, right? So it's going to be selling stock, investors by our owners, right? Investments by our owners, cash out paid to ownership, and also bonds, right? If we're going into debt to finance our company, right? It could be equity financing, which is owners financing, right? Or it could be debt financing, which is from like the bank, right? We're going to borrow money from the bank, we'll pay them back. Still financing activities. So let's go through these. Most of this information that we're going to be doing here is in these A through E, right? Is what we're going to have to read to be able to build this thing. Okay. There could be some other things up here as well, like cash withdrawal from owners. Some of these items are cash items. Some of them may not be. Okay, so let's start with A, and we'll just start building things. Owner's initial investment consists of $37,480 in cash and $45,910 in land. So we're doing the cash flow statement. We don't, at this point for this, we're not doing land, right? That's not cash. Land is not cash. Cash is cash. So that we're going to take this $37,480 right here, and it's going to be down in our financing activities, right? This is an investment by owner. Cash investments by owner, right? So that's where that's going to go. Okay. It says the company, and B, the company's $17,350 in equipment purchase is paid in cash. So we're buying equipment, okay, with cash. So that is going to be an investment activity. So we're buying equipment. Okay, cash in paid for office equipment. Okay. Okay, so that's going to be that. Cash paid to employees, right, is $1,040. Okay. So we're going to be able to put that in there. Cash paid to employees, right? That'll be one of them. That's in the operating side, right? Employees are part of operations. Accounts payable balance consists of, so this is things we need to pay for, liabilities, right? $2,720 office supplies purchase, and $5,250 in employee salaries yet to be paid. Okay, so that is going to be in our payables, right? So if we add that up, let's take a look here real quick at this, right? So there is 7,970, right? That balance consists of, let's see, 2,720 office supply purchase, right? So if we take that out, 2,720, I believe that was the right one, right? Yeah. And then the leftover is this employee salaries yet to be paid. Okay. So that's that. Let's see if it likes our work so far. We can always check our work here and see. So it looks like we're off with cash paid to employees. Okay. So we're gonna adjust this number just a little bit, right? Cash paid to employees is 1,040, and so we have a salaries expense as well on here, right? So the salaries expense is going to be, it doesn't necessarily have to be cash, right? It's going to be part of this. Let's see. So it's going to be, so it's $6,290 is the salaries expense. So something else that we can look at is if we subtract the employee salaries yet to be paid, it's going to be, we're going to subtract out of this 5,250. Okay, so that will tell us actually the amount of salaries paid. So that's another way to reconcile that. So that's the same amount. So why isn't this correct? Well, the cash flow statement is the one statement where we show cash outflow as a negative number. So same thing here with our office equipment. We paid for this. This is cash outflow. It'll be a negative number. So now let's check it again. Looks good. All right. Beautiful. So we got it going the right way. Okay, next one. The company's rent expense, telephone expense, and miscellaneous expense are paid in cash. So what does that mean? That means that we can put all this cash paid for rent, miscellaneous, and I think it was telephone, right? Was another one. There we go. So that is all paid in cash. So let's look at this. So rent expense is $2,950. Again, negative, right? Our oops, what was this other one that I just erased? That's miscellaneous, right? Our miscellaneous. There we go. So our miscellaneous expense was $640. And our telephone was $830. There we go. So that looks good. Okay. Anything else on this last one? It says right here, no cash has yet been collected on the $13,320 consulting revenue earned. Okay. So we haven't collected any of that. So really, we earned revenue, we haven't received a penny of it yet, though. So hopefully we'll get that pretty soon. Okay, so far so good. So this is one thing here. So net cash used by operating, right? It's negative, so we're using cash. It's outflow. Our investing, again, it's going to be used by investing. And then the last one here, we've got one other thing to stick in here. Cash. Let's see, cash withdrawals by owner, right? So that's up here at the very top, 1460. That'll be cash withdrawals by owner. That'll be a negative number. Okay, there we go. I think that does it for us. And then we'll have cash provided by financing, right? Financing activities. Okay. So right here, this next line is going to be all three of these. So operating, investing, and our financing all added together. So it's going to be a net increase, I believe. Let's do the math here real quick. A net increase in cash. So let's take a look at this. So we're gonna sum all these up, right? So we'll start with our positive number here, 36,020. And we'll take our other numbers, our negative numbers, out of it. That's one easy way to do it. 350, okay. And then we're gonna, so we took out the investing, and now we're gonna take out the operating, and that gives us a total of 13,210. 13,210. There we go. So that's a net increase in cash. Our cash balance as of December 1st. Is zero. It's a new company. We just started out. And so really our cash balance at the end of the year should be $13,210. We can double check that by going up at the top, and voila. There it is right there. So that's the answer. So the cash flow statement, the interesting thing is we already know the answer, right? We already know the balance at the very bottom that we're trying to reconcile, that we're trying to figure out. And through the process of creating this, we now have some more information about our company. Is there cash, right, positive or negative flow from operating activities? Same thing from investing, same from financing. Where is our cash going? Where is it coming from? So super important to know. So that one's going to be the last one. Hopefully this helps you get the problem set done. I think this will, if you watch everything and follow along with it. And hopefully it gives you a better understanding of kind of the financial statements. So we're going to build more financial statements as we go through this. It's a key part of the accounting cycle, and so stick with it, and you can be an awesome accountant. If you're not yet, you can do it. So we'll talk to you later. Thanks. Bye.